no matter what happens, Rivian is going up. They continue to deliver their cars, they have a lot of cash to invest in their business, and the stock price is rebounding. Now it's about $14. It may go back to 23 or even more than that. But for that, you have to analyze this business to understand it and assess their future value. So let's begin. The first important question is, has the business improved? And to understand this, you have to look at more indicators. One of them is the number of deliveries. You can see that for the last quarter, they delivered about 10,000 vehicles and produced about 13. But the most important number is this one, their deliveries. Now, you compare this number with their previous quarters. And of course, the last year. So let's see. For quarter, they delivered 10,000. Previous quarter, Q2, you can see here, second quarter, they delivered 13.7 thousand. Q1, the first quarter, they delivered 14.5 thousand vehicles. So as you can see, it's going down. The number of deliveries is going down. Now let's compare it to the last year, 2023, Q3 2023. And you can see that last year in 2023, here, third quarter, they delivered 15.5 thousand vehicles. So if you compare this number, you can see a huge decline from 15,000 to 10,000. Quarter by quarter, this number went down. So the number of deliveries hasn't improved. But as you can see, the stock price is going up. Why is that? Well, they have some opportunities. And if you understand them, then you will know why the stock price is going up. So, to answer this question, the business hasn't improved. You can also see their revenues. You see a decline in the revenue from 1.3 billion to 874 million for the last 3 months, and for the last 9 months you see a small increase from 3.1 billion to 3.2 billion. Now, don't try to assess this business quarter by quarter. Look over a longer period, because maybe this quarter was bad and the next one may be the same, but after 1 year, 2 years, the revenue will go up and their losses will decrease. So far, as you can see, they are spending 4 billion to make 3.2 billion in revenue. For the moment, their fundamentals don't look that great, but in the long term, a RIVN can change this picture, this bad picture. So let's continue to the next question, which is, what are their opportunities? Now, as you've seen, for the moment, Rivian is selling different cars. They have different models and they're planning to expand, to create new products, R2, R3, R3X, and other models, SUVs and vans. This is great. As long as they expand and they maintain their costs low and they succeed to make a profit, they can increase their revenue and their earnings. But this is not all. They also have other opportunities. One of them, and this is a sign, just a small sign, the first step, is a joint venture with Volkswagen Group. Rivian is offering their full stack software technologies and also their architecture, electrical architecture. Their plan, the plan of Rivian, is to be a technology partner to other manufacturers. What does it mean? Well, if Rivian can offer only the software part to other car companies, they can charge high fees, high commissions for the services. Because as you know, by selling only cars, your margins won't be that high. But by going into software to offer the stack software for the car industry, that will be quite great. Imagine Rivian to be like Microsoft. Microsoft is offering their software to different enterprises. They are the base. They offer the operating system plus other applications. And if Rivian can do the same thing to offer the full stack, the operating system plus other applications, then Rivian can do quite well. Now, from this venture, Rivian will get about 5 billion from Volkswagen Group. And this is quite important. And I will tell you why. But first of all, let's finish with this software opportunity. As long as they continue with this venture and maybe they can attract more clients, they will do well. And this is not all. If you look at the last quarter here, you can also see that Rivian started to offer a subscription service. Here, Connect Plus, where they offer streaming and connectivity services for Rivian owners. This is a paid subscription, and for the moment, most of the customers subscribed to this service, Connect Plus. Of course, they also offered a 60 days free trial period. So that's why the majority of their customers subscribe to Connect Plus. But if those subscribers continue to pay this subscription to Connect Plus, that will be a great sign that Rivian is moving towards this software industry to create, besides this revenue only from cars, also a software segment. And if they can achieve that, they can succeed in that area, then for sure Rivian will become profitable. Their margins will improve in the long term, and you can make some money with this stock, quite a lot. But of course, there is a lot of work. That's why you have to follow this company and see how it's going. If Connect Plus is a success, and also this joint venture with Volkswagen. Follow those two opportunities. If they go well, then for sure Rivian will succeed. Now, what are the risks? Because you also have to think of the risk, not only about the opportunities, the upside. What can go wrong? Because as you see, they spent 4 billion for the last 9 months to make only 3.2 billion in revenue. So they are burning a lot of money. Of course, if you look at their balance sheet, even though they have a lot of losses, they have enough cash to survive, to fund their losing operations, and maybe they will succeed and can turn this business profitable. For the moment, they have about 6.7 billion in cash. You can see here. Plus, this is not all. With this new joint venture, they also get 5 billion. So you add 6.7 billion with 5, you have almost 12 billion in cash. So with 12 billion, they can continue with their losses. But of course, you have to see an increase in the revenue, the number of deliveries, and also their software business to improve, to make some money from it, or expand their network. Because if they fail, those losses won't be sustainable, and this is the risk. Rivian may not become profitable, and this is the main risk. In the long term. We have to think in the long term. This is the main risk. And of course, also some dilution. For the moment, they are doing quite well. The number of shares has been around 900 million. Now, more recently, this number has increased to 1 billion. So you have a small dilution, but not that high compared to other companies. You also have to be aware of this risk in the future if they issue too many shares. So this is the risk: not becoming profitable, dilution, and maybe their software business won't work. They won't be able to build their network. Rivian to be a technology partner to other manufacturers, because this is a high opportunity for them. Now, the next question is, will the stock price go up? So if you look at the stock price, it reacts to every news about Rivian. If they announce a new product, the stock price goes up. If they announce a new joint venture or a new partnership, the stock price goes up, and so on. So in the short term, everything can happen. The stock price can double or go down another 50%. Everything can happen, and you have to understand this. But what matters, if you are planning to invest in this company for the long term, let's say over the next 5 to 10 years, is their profitability. If they can turn this business profitable. And you've seen their opportunities, especially that software segment, to build that software network and make some money. If they can do that, then the stock price of Rivian can increase more in the future. So follow those opportunities, especially their software segment, their new software. So that's it for this video. And if you have other questions, please let me know in the comments.